Another week, another trader issues video. I'm Dee, this is Market Stalkers. Let's get into it. So today I thought we should talk about managing your profits. However, I'm going to tell you right away, most people look at profit management from the wrong point of view. Profit management is not necessarily about managing profits, but instead it's about managing your losses. There's not that much to learn from a trade that worked out. You identified a setup, you entered it, it moved in your direction, that's it. Okay, not quite. There are a couple more things to it. Generally, you need to make sure that your target isn't overly ambitious, which means don't aim for like a bazillion R multiples. For most instruments in day trading, between 2 to 4 risk-reward ratio on your trades is statistically viable for an excellent system, like more than enough. Another thing that you do want to do is to assign some contingency exit rules just in case that your original target doesn't get reached quickly enough. Because the longer your trade stays on without moving in your desired direction, the less likely it is to reach your target. So this means you need an idea of a maximum duration on the trade to give it enough time to do what you want it to, so that you don't have to wait endlessly for a trade to work out. Typically, a good starting point is to use 4 to 8 periods from the time frame that you've entered. So if you take a setup from a daily chart, that's 4 to 8 days. From a weekly chart, 4 to 8 weeks. From a 30-minute chart, 2 to 4 hours. Now you can also have contingency exits based on price action reversals, but I found that like on its own, every time I give that option to a trader, any minor pullback and the trader just grasshoppers out of a trade. And then, that's just false economy. It's kind of similar to trailing stops because prices will kind of ebb and weave around to your target. They will test and then they will retest your entry, and a lot of the times, very rarely will you get that kind of in like one candle just straight up or straight down.
It's not how it works.
And yes, that also includes intraday trading too. You have to be patient. People think that day trading is like you sit and suddenly you immediately like start kicking off trade after trade after trade like a mad person. But really, I only do about 2 to 4 trades a day, and there's a lot of waiting around. You're either waiting around for your setups to come, or you're waiting for the trades to do whatever it's supposed to do. Most of the work is done way before you enter a trade. You have a weekly plan and then you have pre-market prep. I already know what I want to see and the different possibilities of what an order flow event might look like that would take me in that direction. If you follow me on Twitter, you'll notice that I have this like time-based exit in mind, as well as a price-based exit. So the time-based exit is usually managed automatically. I have a little script that just closes all trades at certain times a day. So rather than just letting the trade go to either kind of full target being a for a tick or full loss, a lot of my trades end up just below the intended target or only in a few ticks profit or a few ticks loss. That's really all you can do on profit management. You stay realistic while keeping a statistically viable profit target. If you're finding the video useful,
give it a thumbs up
so that we can get it in front of other traders who might be struggling with similar issues. So the more likes that the video gets, the more people can learn more about professional trading strategies and order flow.
Moving on.
Now, with profit management, a lot of people don't necessarily think about the accounting side of profit and loss until they start working for prop trading companies. Paying attention and being mindful where you are in the week or in the month. And the reason why you never think about this is because as an independent trader, you're the one in charge of your payouts. So, if you want to do a withdrawal, you can just click and pay yourself out. But when you're working for a company, they will only pay you out once a month if you have profits. So things like being mindful to not start your Monday, bomb your P&L as fast as possible, and then spend the rest of the week trying to pull yourself out of a hole that you've dug for yourself. And same goes for Fridays and final day of the month. Start slow, stop trading if you're on a high mark. If you've had an okay week, let's say you've made a bit of money, don't go crazy on the Friday and just ruin it, or just go nuts on the 24th of the month. Otherwise, come payout time, everyone around you is like happily planning nights out and getting
supplies.
And you're sitting there thinking, there goes my mortgage, my dogs will go hungry. Which corner of the street is the least uncomfortable? If you lose one trade, it's extremely unlikely that you'll get another setup in the next 2 minutes, especially when you're working from market profile and order flow. You won't know anything new about the market data until at least one extra TPO period goes by. It's like, but in many cases, it's more like 2 to 4 TPOs, which is up to 2 hours. I hope you enjoyed this video. If you found all of these tips useful, then please subscribe to the channel. I know there's a lot of you watching my videos and you're not subscribed. I can see you. So make sure to subscribe so that you don't miss any other trader issues video. Check it out. I'll see you next time. Okay, does that make any sense? No. Because the longer your trade stays on without... if you're finding the video useless? Useless? If you find the video totally useless,